Hello traders, it's Samurai Trader here with an update on the day trading of the NQ today. We had a very good day. We had a fantastic day trading the crude, the black gold as we call it, and for those of you who haven't traded crude before, it's at $10 a tick and you get some fantastic trends. Particularly at the moment, we've seen a lot of volatility and some great liquidity. If I've got time, I'll try to do perhaps a recap video. We had 5 or 6 great winning trades on the crude today, but today on this video I'll focus on the NQ. A couple of key points. I also want to show you a couple of mistakes that I made and just explain those. And even the best of us make mistakes, and it was still worked out to be what did I net, was still $180 odd per contract. So it was still good, but it should have been a lot better. Would have, should have, coulda. And so I'll talk about some of those mistakes that I make, because I think it's important that you also know the mistakes that are made, so hopefully you don't repeat the same thing. So let's have a look at this. We won't look at the whole day's trading, but let's just have a look at some notes that I'd taken as we were trading away. So it was a very early start for me. I was up at 2 a.m. but these are a few, I've marked up a few of these before I started live trading. Down here, down under, I can't wait to move back to LA, where the trading hours are much kinder. So let's have a look. We saw some movement here, and I had a T2 signal here, and actually let me just put a pointer on here. We had a classic T2, a slingshot trade here. Now one thing to consider and to remember is that you've got the 200 EMA here, and very high possibilities you're going to have a bounce, so you want to really be aware here. And the maximum we actually had was 8 ticks of movement if you had have taken this. There's another warning sign, is that the entry signal is well out of the channel. We can see our channel up here, and we're well out of a channel, so that really means you want to really be very quick on the mark to exit a trade if it starts to move against you. And there is one signal here that it potentially is going against you. Look at the platinum going up against you here, and it actually turned into a T89 and a T19A. Now T89 is when the price action is well out of the channel, and that's a very high probability trade. When you have your entry well out of a channel, it's going to go back to the mean, and they're a great bankable trade. And we have traders that purely focus on a T89 setup. And a T19A, that's a classic divergence trade where you have what we call two hills, and you can see here we've got a lower low on price, and we've got a higher high on our divergence indicator. Now here we also had a 50% retrace from our previous high. It's also a pivot bounce and a T1, so that was a fantastic little trade to take. That was good for 18 odd ticks down here. And that's the thing, as I mentioned, you really want to be front running the 200 EMA. Whenever you see your price coming down there, you want to really make sure you're going to exit before this. In most cases, there might be some exceptions, which I'll explain if I see any here today, but you can see here you would have exited. You then had a 200 bounce, and if you didn't take that one, you definitely would have taken this one here. Why? Well, here we had a T2, but then it turned into another pivot bounce. Now let me just explain this. A T2 is a classic slingshot. We can see here it really bounced off the 89, but then the maximum you would have got was really 6 to 7 ticks before you hit this 200. Now remember, you want to front run these, so that is why you would have only picked up 6 to 7 ticks, slightly above there, and even at best you might have only got 8 or 9 9 or 10 ticks. But remember, you want to be really aware you've got a very strong uptrend with your 200. You're going to almost certainly 90% of the time have a bounce, which is exactly what you had. You had divergence. You also had a T7 formation, which with the trend they're a 90% trade, so you would have been in that trade there. Here we had another beautiful T2 with the trend, and that really gets back to something to really strongly consider, traders. You hear me talk about this in virtually every video. Unless you're highly experienced and you really know your probabilities in your statistics, don't counter trend trade. It's really not worth it, because as a newer trader, or even if you're an extremely experienced trader that hasn't done well up to date, don't divergence trade, don't counter trend trade, because it really shakes your confidence. And that's really one of the most important things in our business. And just while I think of it, let me just this is a little webinar I gave earlier, and to some of my professional clients in one of the institutions, and a couple of things we covered is that when you look at what the institutions are doing, number one, when you look at the prop traders, their charts are very clean. They don't have a lot on there. And we were just discussing this really. Gann's famous statement is, there's nothing new under the sun, and it's just so true when it comes to trading. Now, what we were talking about is this: small daily improvements lead to stunning success. If trading has not been kind to you, and we know that over 94% of traders fail for some very classical reasons, is that, you know, to get you back on track, stay out of the counter trend trading, trade with the trend. Now, that is really difficult in the early stages, in the early days, but really you've got to become disciplined. You really must become disciplined. Now, as you know, I'm very blunt and very direct. I want to earn the right to be your success coach. And some of my professional traders I coach every week, yet they're spectacularly successful in what they do. And some of you that have tried to get hold of me for coaching and whatever, you know sometimes how busy I am, and how long it takes me to get back to you, because I'm flat out dealing with some of the professionals. By the way, still email me, I will get back to you. But the point here is this: that the state of your life is nothing more than a reflection of your state of mind. Let me say that again. The state of your life is nothing more than a reflection of a state of your mind. Dr. Wayne Dwyer, one of the world's greatest philosophers and personal coaches and metaphysical teachers. If you don't know him, please Google him. Now, the thing there is this: that the state of your trading life is nothing more than a reflection of your state of mind either. That is, you really need to get your mind right. If you're not succeeding or hitting the goals that you should be achieving and want to achieve, you need to really stand back. And as Pogo said, I have met the enemy, and the enemy is us. Is that we are, and many of us heard this old statement, that we are our own worst enemy. So let's remember that our decisions determine our destiny. Success or failure is about the small decisions we make on a daily basis. With that being said, traders, if you've failed up till now, and I see your emails and I deal with you and I see how tough it is for many of you, is that your past does not equal your future. If you start again, draw a line in the sand and say, right, here on in, I will not put up with this anymore. I will trend trade only until I'm successful. And for many of you, you may never counter trend trade again, because you'll discover you don't need to. You see, just earning $100 a day, and actually I've got some slides on a presentation I did recently, I'll perhaps present in my next recap or two, where just $100 a day leads to spectacular success, and I'll show you on a couple of slides that I've done on that point. But let's keep going on this. And we can see we had a counter trend trade here. This is a T19A, but once again, getting back to here, let's stick with the trend traders. Great trend trade. Now what about this one? You can see the paint bar. Well, look at my zero leg is falling. For those of you know, that means stay out. Here we've got here a bounce off the 89, classic bounce off the 89, another T1 and T2. Once again, a beautiful bounce here in the direction of our 89 and 200. So you should just be trend trading only. Once again, you don't try to catch a falling knife. You've probably heard that saying. Well, in this particular case, you want to stay with the trend. You really do here. And here we've got here a T19A. Yes, in the long run that would have worked out, but once again, let's consider and let's keep looking at these trend trades. You've got here a T1, another T1. Now this is also a T19 with the trend, and a T7. Now remember what I mentioned here: double bottoms with the trend. very high success rate. Now we had here a T19A just a divergence trade. For those divergence trade, by the way, you had a failed trade there with the trend. You can see here that you've been at a high. You probably would have taken that one. Now we were trading the crude at this stage. Now remember, I've spoken about this a number of times. Be very careful in trading multiple markets. Once again, become a specialist. He who chases two rabbits catches none, and that's one of the problems when I'm sometimes trading and training, I should say, is it's very hard for me to trade live and train at the same time, as well as trade multiple markets. Now I know there are trading rooms out there and other people that you know, they'll trade 3 or 4 markets at a time. I personally just can't do that. I find it very difficult. 2's the maximum for me, and as you'll see in a moment, I make mistakes, so you've got to be very careful here. Now a couple of comments here. I have an anchor chart that I'll look at. The anchor chart showed a very strong uptrend. Here I'm coming live myself on this market. I always check the volume. Note the 89 is a little flat, but it's still in a good uptrend here. We had a T2. This is, you can see where I shorted the market. My only concern with this one was, is it going to bounce off the 89? Well, one reason I took this, or the main reason, was I had a lower high here. These are what I call T11s. They're for me a fairly high probability trade. I entered here, but I set my stop to be, I went for 13 ticks, got 13 ticks on this one. I bounced around a little bit on the pivot, got out at 13, but notice here I wanted to make sure that, and I got out almost of a tick off at 200, because remembering here it bounced at 10. I started to sweat a little bit. Well, not quite, but I wanted this to deliver. I was a bit worried it was going to go up, but I got filled on it here. Then you had a classic 200B 200 bounce here. Then you had a beautiful T89. Now look how far out of the moving averages we are here, out of our channel here. You had a pivot bounce and a T89, a very sweet trade. Down here we had another classic 200 bounce. Now I actually shorted this market here, and you can see here where this is a reason I entered this one was on a 50% retrace. I like 50% retraces, and quite often after I've had a very strong down move like this, the market will continue. However, this is one I wanted to show you that I actually got stopped on this. Now my stop was actually 2 or 3, it was a couple of ticks up above here. However, I got 4 ticks slip. The market moved very quickly at this stage. That went within seconds, and this is one thing to be aware of when you're trading the YM, the NQ. It's not uncommon to get slippage on your exit. That is, all of a sudden you get slammed by a number of orders, and you can see what happened. The algos kick in, and you can see this is a classic T1. It went against me, it flicked me out, and I was down 11 ticks on the 10 contracts. That's the way it goes. But I promptly re-entered here on a lower high, and I picked up 15 ticks on this one. So that's $75 per contract by 10. Now here in this particular case, I went for a move just below the 200. Now normally I'd front run, but I was ready to exit the market if we didn't punch through. Okay, so I managed to pick up my 15 ticks, and you can see here that actually ticked down of a very tick. So in some ways, traders, I was very lucky, and then it turned into a 200 bounce. Now look at these 200 bounces that you get, and you see them, you just see why they're so good. 200 bounce, 200 bounce. We've got here, whoops, let me just go back here, a 200 bounce, an 89 bounce. So you can see why I love the bounces off your 89 and 200. Traded correctly, they're a very profitable trade. Now up here then we had beautiful divergence trade leading into a lower high. As I mentioned, I was on the crude at this stage, but then down here I took a silly trade, and when I say silly, it was a bad mistake. Now I ended up getting out of it okay with picking up 3 ticks, but it was just a silly trade to take. Now I'd been up since a little bit before 2 a.m. It's nearly 6 a.m. at this stage. So number one, there are a number of things going against me on this trade. I was right at the 200 traders. That was foolish when I had a 200 bounce and I traded against it. Just a silly trade. Also the time, it was 15 minutes to 4 New York time, 15 minutes to 6 my time, which means that traditionally you'll go sideways or the market can fly in either direction. And I was against the pivot, so I took that trade. I was tired and it was just a silly trade to take. Now I sailed through and I come out, exited here with +3 ticks. However, traders, for the lesson, it was, once again, I wanted to show you this because we all make silly mistakes sometimes. Now what I perhaps should have done is exited that trade, but it really was going against me a little before I really realized what I'd done. So the biggest lesson there is I've been having a great time on the crude, and I was tired. So don't trade when you're tired. So as I mentioned, I still ended up just after all brokerage, my realized close profit was just slightly over $180 per contract. So still a great night on the NQ. Could have been a lot better. We absolutely slaughtered it on the crude. So traders, that's a quick rundown on the market. Now if you'd like to know more about my trading services, my fast track traders coaching program, my trading strategies, my live trading room, which I'm starting up, please email me directly at trader@IamADayTrader. Also, please subscribe to my YouTube channel to be kept up to date. It is my goal, by the way. I've got a couple of large projects I'll have finished in the next week or so, is to be doing updates every day and to be starting a live trading room. In the meantime, let me fast track you with all of my indicator setups and comprehensive training videos on how to trade my 12 core setups. Thank you, traders. We'll catch up very soon.